One of our cultural pillars is, being entrepreneurial centric as well. We have tremendous empathy for what the entrepreneur goes through. And so I think just giving them capital is not enough. We also recognize that these markets, you have to be patient. And, in partnership with Lucas Walton and Builders Vision, we've been able to be patient, I think creative investors for the last 10 years.
Welcome to this week's episode of Leaders on a Mission. I'm your host, Simon Leach, and today we have an exceptional guest on the show, Aaron Rudberg, Managing Partner of S2G Ventures. Now, Aaron really is at the forefront of venture capital innovation. And for those that don't know S2G, they've really made a significant impact, really, investing in over 100 portfolio companies and committing somewhere in the region of about $2.5 billion in capital. So really, they back entrepreneurs who are tackling some of the most pressing challenges of our time. And with Aaron leading the charge, stay tuned for a really insightful conversation with one of the leading minds in venture capital. And for all my guests, I must say, I think Aaron's just caved in after years of me asking him to kind of come on the show. Eventually, he kind of, just felt sorry for me and decided to come on. So in all seriousness, Aaron, thanks for your time. I really appreciate you coming on today.
Yeah, Simon, thank you for having me. It's a pleasure to be here, and I'm excited to just have this conversation with you.
Awesome. So maybe just share a little bit about, I suppose, your career journey, particularly, I suppose, what inspired you to join the sustainable venture capital industry, as it were?
Yeah. So I've spent my career at different elements of the capital markets. I, early in my career, 20 some years ago, was lucky to be part of a fund of funds that was investing in emerging managers, and learned what it's like to be an LP. This was after I had been an associate at a venture firm, and then had tried my hand as an entrepreneur prior to that. And so I had kind of the experience of both helping to try to build a company, investing in companies, and then being an LP. And, I think that helped me sort of understand what the different needs and desires of the different capital market participants were. Tremendous respect for entrepreneurs. I mean, building a company, trying to grow a business from startup to scale really is very, very difficult. And I think a lot of empathy for entrepreneurs. I then was lucky enough to join a firm called Robert W. Baird as part of their direct investment team. And in my role there, I was working across our US, European, and teams in Asia. And spent 10 years there really understanding what institutional quality was and scale. Baird is a global firm and has thousands of individuals that are across investment banking, capital markets, equity sales and trading, et cetera. I was in the direct investment business. And luckily, one day I got a call from a friend who now is my partner, Chuck Templeton, who asked me if I wanted to both do investing, but also invest with a purpose and a mission. And that call, he asked me if I knew anyone, and I said, "Well, what about me?" And he's like, "Well, I was glad to hear you say that." And that was about 8 years ago, and we spent 6 or 9 months kind of digging through, getting. I'd known Chuck since actually he attended my wedding 21 years ago, so we'd known each other quite well. But we spent time just understanding was I the right fit for S2G. At the time, S2G was 4 or 5 people, and so fairly small. And, if I was the right fit, if they were the right fit for me, and, eventually came to the conclusion that we both fit well together. And so I joined up with Chuck and Matt Walker and Sanjeev Krishnan and Lucas Walton in building S2G. And I will, my wife probably says it best when she says that when I joined S2G, she saw very quickly just how the mix of investing behind entrepreneurs, but also investing with a mission, that combination really opened up a part of me that I think I didn't know existed, and a passion for, both doing well and doing good.
Awesome. Yeah, no, I love that. So is it more difficult, though, when you think back to all that experience you've got and all the different, No doubt you invested in a range of different sectors, I would have thought, right? With your experience. Investing in this kind of area of sustainability and innovation, is it more difficult to be successful, do you think, in your experience?
Yeah, I think that, so when I think Chuck called me initially, and even when I told friends that I was leaving, I think the initial reaction was philanthropy, or impact investing has a brand of being a discount or concessionary in terms of financial returns. I think what's important is, there are groups that are obviously philanthropy. There are groups that are doing concessionary investing. For S2G, we are very much focused on both financial returns and positive environmental outcomes as well. And we talk frequently internally that we call this tough tech. This is not generally, we're not investing in companies that are 90% gross margin software businesses. We have some software investments, but generally these are tough industries where you're focused on commodity industries. They tend to be lower gross margin businesses, in the 30-40% gross margin businesses. They tend to be in industries where oligopolies control the channel. They're capital intensive. When you think about electrons or calories, those industries are dominated by large players, but also players that have big balance sheets and access to billions of dollars of capital to build facilities, to build out manufacturing, whatever the case may be, transmission. And they're also sensitive to regulatory, things like the IRA or the Green New Deal in Europe. And so I think for us, one of the things that it's been important is, going into that very clear-eyed and understanding the challenges and the opportunities, and then trying to build a firm and a capability that allows us to win in the market and help our entrepreneurs grow and scale despite those challenges. I think that, what's important though is, if you think about a lot of great companies that have been built, I mean, most people talk about Tesla, but you think about First Solar or others, that required patient capital. It required a level of grit and, ability to kind of push a boulder up a hill when others are saying it's never going to work. And I think what we've tried to focus on is finding entrepreneurs that have that resilience, have that grit, that growth mindset, and backing them, and then helping them with resources, relationships, networks, to get to that place, and then create winners. And I think what we're finding in the market is, and you're seeing every day, transactions being announced by some of the largest companies in the world that are trying to meet their sustainability commitments, and they need innovation, they need entrepreneurs to get there. They can't do it alone. And so that's something that we're very excited about. The market, though, has matured over the last 10 years from when S2G was started in 2014. There are now hundreds of funds that are focused on this. There are large corporates that are making major commitments. There are pension funds and sovereigns that are focused on these issues. And so I think in many ways, the doors and windows are opening more today than they were when we started 10 years ago.
Yeah, awesome. That's great to hear. And what do you think the biggest difference is when you think back to your journey at the beginning with these guys and where we are now as in the cycle, as it were?
Oh, I mean, I think for S2G, I mean, there's a lot to that question. I guess for me, when I joined S2G, I don't think I was imagining that we'd be where we are today. We have had an incredible partnership with Lucas, Walton, and Builders Vision over the last 10 years that has gotten us to a place where we're now able to execute on 10 years of lessons learned, relationships that we built, networks that is, we think, has positioned us well as a firm. I think for the firm, the market is more mature, it's more competitive. There's more entrepreneurs that are out there and innovation happening. When we first started investing in food and agriculture, there were not a lot of investors. And then you started to see, we were lucky enough to invest in companies like Beyond Meat and Sweet Green and experience success there. And those companies, became, I think, darlings in many ways for other investors to want to step into the market. And now I think it's not a question of will there ever be successful companies that come out of this, but what's the next business? Some of that maturity I think is positive. The challenge with it though is valuations can sometimes be ahead of where the market is. And so I think being disciplined, understanding, as I mentioned earlier, some of the tough tech features of these markets and what's the real opportunity for these companies, and then having honest conversations with co-investors, with entrepreneurs around the real opportunity that's in front of them is, I think, something we try to pride ourselves on. But it's definitely, there's a lot more attention, more focus, both good and bad, as I'm sure you've seen. Sometimes our markets and sustainability as a word can be a trigger word, and so I think just being disciplined and focused on what we're doing day to day. And not getting involved in the noise that's out there, I think is really important.
And tell me though, when you think where we are now, a couple of questions that come to mind actually. Have valuations, private sector valuations now, are they at the right level? Or do they still have some way to go, in your opinion?
It's very company specific and probably subsector specific. I think we are in the midst of a market correction in a number of these sectors. I think that's true across the board, but both in public markets, but also in private markets. I think in the private markets that we're operating in, we are seeing valuations come down a bit, and some of that is healthy. And there have been some, I'd say, generalist firms that had pulled back from investing in and around climate, sustainability, whatever buzzword you'd like to use. And I think that has been a good thing generally. We need more capital in these markets. I mean, that I think if we're going to meet our targets in terms of decarbonization and provide a healthier environment, we need more capital. However, I think again there's some realities of these markets in terms of the exit potential for these companies that I think were challenged because companies raised capital at too high valuations, and that seduction I think is strong when you've got a GP, a fund coming to you and saying, we'll invest 25, 50, 100 million at $1 billion valuation. Yet the real size of the market is, maybe 2 billion. The entrepreneur tends to think about, I'm a unicorn, I'm, less dilution, a lot of capital, but I always say that the execution risk goes up because you have a very thin, small window to execute. If you execute, that will work out well for you. If you don't, I think for an entrepreneur, you have to remember that investor is going to take control, or they're going to have certain negative covenant or negative controls that are going to be their hammer if you don't execute. So I think finding that balance of the right valuation and the right path to value for the company, the right kind of mind on what your exit pathway is important. Do I think valuations will come down a little bit? I think in some of these sectors it still will over the next 6 to 12 months. And I think in others there's probably some floors that have been created that will hold firm. But we're definitely seeing valuations come down across the board.
Yeah.
But good companies, the cream rises to the top in these markets. So good companies will continue to attract capital at very solid valuations.
Yeah. As long as we avoid this kind of hype cycle as what we had like a few years ago, when all of a sudden there's some buzz around and there's some excitement around and everyone starts chasing stuff and, it's in the news and the press about sustainability and all of a sudden things pop and they just pop to the detriment really because, raising significant capital at high valuations, it just makes that journey. We've seen so many companies struggle with that journey 2-3 years down the line and, how to recapitalize, as it were, right? So hopefully we'll be on a steady.
Although I will say, in AI, right, you see this in AI, it's not just sustainability. I think it's this is human nature. Whether, and across history, we have examples of, markets that whether it was, flowers or grains or commodities that go through these hype cycles. And so, my view is that's not going to change. You're always going to see hype cycles. And after Beyond Meat went public, for example, and this was many years ago, I think 50% of all entrepreneurs that walked through our door were saying, we are the next Beyond Meat. And, that was just part of the tagline that they all sort of talked about. I'm not sure any of those companies became the next Beyond Meat. But I think people like to, the hype cycle is what sort of drives a lot of this inspiration and innovation. We just have to be disciplined, I think, as investors and be somewhat stoic around understanding that, what is the true value of a business and what can you ultimately exit this business for, whether it's in the public markets or it's in M&A. And because that's our job is to, manage capital, both deploy it, but then also obviously return that back to our investors at a multiple of what we're receiving it at.
Yeah, absolutely. And do you? I suppose a couple of things. I've heard Sanjeet talk about, the capital gap, as it were, because you sometimes see like the seed and the A round and funding come there, but then capital intensive scale up is another challenge altogether, really, isn't it, in terms of raising capital? Where do you think we are on that kind of journey, and how are you seeing that kind of world evolve?
Yeah, we're making progress because I think there are a lot more firms and funds and investors that are interested in these markets. If you really think about these capital markets, it's both we tend to think of it as a relay race, meaning you've got, sort of the early stage seed investors hand the baton to maybe the growth investors who then hand the baton to the buyout funds who then maybe, probably not a perfect example, the public markets or even the infrastructure folks. And so I think that is all being built, that plumbing system in these tough tech markets. So we're in that process. I also think that part of that is being driven by large institutions, pension funds, family offices, sovereigns that deploy capital and are interested in meeting certain commitments around sustainability, climate targets. They want to deploy it to a fund. And so then what you see is the big funds, whether it's Apollo, TPG, Carlyle, the big Blackstone that announce strategies towards this because they see it a way to allocate or get capital, get a fee base, maybe a profit participation where they can then build teams and go deploy it. And that in many ways is kind of what that plumbing system needs to be built. I think one of the things that we've talked a lot about is we need more work there to do that. There's a lot of great work that's happening in early stage venture. There's a capital gap in kind of growth and buyout funds in and around these sectors. And then there's a lot of work in infrastructure. I mean, infrastructure was really where some of the first investing in renewable energy and even in some of the food and agriculture sectors were made. But there's sort of that gap. When we wrote a paper that's on our website called The Missing Middle that talks a little bit about this, where particularly in energy, we looked at sort of all the capital and the funds that were focused on early stage venture, which there's a significant amount of capital there. There's a lot of capital on the infrastructure side, but there's really not much capital in that late venture to growth market. And that's an opportunity, especially when you see, as we noted earlier, the valuations coming down. Because I think one of the challenges has been historically in that market is that valuations were quite high for late venture or early growth, and yet maybe the revenues weren't in line with where the valuation of the company was. We've seen some of that change here with companies and their growth and capabilities, and then as a result, now I think there's a lot of attractive assets in that sort of missing middle that I think over the next 5-10 years, you're going to see a lot more capital being deployed there as well.
Yeah, great. Yeah, and it's good to see some of the deals, some of the infrastructure deals that have been announced, actually. Even if you look at the sustainable aviation fuels kind of space, some big asset managers kind of really putting some kind of dollars into, to lead and to develop the infrastructure. So, that's great to see.
That's right. Yeah, I mean, it's not as simple as, United Airlines, let's say, just buying, SAF. I mean, what they need is the entire system built upstream. So I think one of the things that, groups like even United or others have done, Lufthansa and others, is that thinking about the entire supply chain, because I mean, for them, it does go all the way back to the beginning point of the supply chain, and they need that whole system to be built if they're going to be able to deliver consistent fuel that is going to be able to make them a more sustainable company. And so while the end market itself and the technology may be good, if you can't get the products there to airports around the world, it doesn't scale. And ultimately, I think one of the things that has been, again, around the missing middle has been great innovation, but an inability to scale across, either a certain geography or in a channel. And that's what these market participants need.
Yeah, absolutely. I was talking to an entrepreneur earlier, and he said something interesting to me, and I just wanted to ask you about this. He said, like, when he looking for an investment, he always found that dealing with venture firms, it was always about the shiny, innovative, IP protected technology. He always thought. And now that focus is much more on scale, manufacturing, really being able to bring that to market. Have you noticed that being a substantial kind of change in the emphasis, as it relates to, say, where you invest, as it relates to that question?
Yeah, I think that's part of it. I mean, the general statements like that I have trouble with sometimes when someone makes it, like in that case, the entrepreneur, because I think it is so. It depends on the investor and what their strategy is. I mean, you have to remember, for even the entrepreneurs that we meet with, one of the questions that we rarely get is, who's your investor base? What are their interests? What are their concerns? What are you trying to achieve as a fund? And, because ultimately we've got investors and, the entrepreneur has investors. And so I think in many ways, we do spend a lot of time with our entrepreneurs talking to them about their company and, digging in and, ripping it apart and all those kind of things, doing our diligence that you need to do. But we have clients as well. And, they influence how we invest. And so for us, or other investors, I think what I'm hearing from that entrepreneur is maybe they're talking to some investors who historically were doing early stage and, very focused around IP protection and the technology risk. But they now are looking at, the technology risk, maybe they're a later stage group, and technology risk, it's been de-risked, and they're more concerned about the scale. We have a framework internally that we talk about and we use, where we talk about idea. It's 4 stages, pretty simple, but idea, validation, infrastructure, scale. The idea is that if you're a company that, part of what we use that for is a language internally. Where is the company at in that journey? Do they understand where they are in that journey? And is the capital going to be used at the right point in that journey? So if you're a company that's building infrastructure, but you've not gotten validation yet, it's our view that you're probably going to be very inefficient with the capital that we're going to invest. And we're probably not the right fit for you, because our view is you need validation before you start building infrastructure, and for sure before you scale. But what I think you saw as capital was flush is a lot of companies were building infrastructure, they were scaling before they had validation. They didn't know what the problem was that they were solving. They didn't know pricing. They hadn't figured out maybe even how to design their product and scale it appropriately. So how can you build the infrastructure and even scale before you know that in terms of the customer need and demand? And so we've tried to use that framework at least. And so what I'm hearing from you, I think, is that this particular entrepreneur is hearing from investors more of an interest, and it could be a reason maybe he's beyond validation, and they're now like, great, you validated, but how are you going to, what's the infrastructure you need to scale this? Is at least I think what I'm hearing a little bit. But it is, we're in that point now where deployment of technologies is really the opportunity. It's not, we clearly still have a lot of room to grow and will continue to grow in innovation. But I think investors and even corporates are really interested in, how do you scale? How can you get from, maybe one market, let's say the southeast of the US, to across the country? And do you have the capabilities of the team to be able to execute on that? And I think what a lot of these large corporates that own these channels, whether it's an ag retail or utilities, what they have learned a lot of lessons on is that a number of these technologies can't scale beyond maybe the pilot phase.
Yeah, absolutely. And something just to pick up on, Aaron, you mentioned earlier, but I hadn't really given it much thought and consideration. I'd always looked at your portfolio companies, but of course, you've got lots of LPs and lots of investors in your funds, as well. What's the general change or kind of view, across that sentiment, as it were? And I'm thinking particularly around, like, out there at the moment, you hear about companies trying to raise a fund at the moment as well, with it being particularly challenging at the moment. What's your view on that world, and fundraising and new sources of capital kind of coming into the space?
And I'd focus more on the fundraising for companies. And I think that, where maybe, these markets are obviously cyclical, and where you have a market where maybe 2-3 years ago, the power was in the entrepreneur's hands and less in the fund hands. And again, it's never as clean or as clear as this, but generally that balance is tilted more towards the investor these days. And I think for entrepreneurs, it is definitely a harder environment to raise capital. I think, I mentioned pension funds, endowments, family offices. I think, and even funds like ourselves are definitely more discerning, disciplined on valuation and expectations and underwriting for these companies. And, part of that is a reflection of the public markets are not open for exit. They will open at some point. And so, I think some of the best companies will be invested during this cycle, and they will, grow up to be huge businesses. But it is, the capital is not as free flowing as it was 3-4 years ago, particularly around, sustainability, climate impact. I think the election is, in the US and some of the elections that have happened in Europe as well have created some pause, or just even, people taking a deep breath and wondering, what the floor is maybe on whether it's valuations or what these exit markets look like. All of this, in my view, is very healthy. These markets go through cycles. And as we mentioned earlier, we were a little bit in a hype cycle. We've stepped back from that. And that's going to be a good thing in the long run for these markets.
Yeah, no, absolutely. No, I'd love to have a little chat about what S2G do, to really provide and add value to the portfolio companies beyond capital, because I really see you guys clearly building the ecosystem. So I'd love to maybe dive into an example or talk through where you can kind of demonstrate that.
Yeah, I mean, we've tried to, from the beginning, at least from when I joined, but I know this was even true before I joined, is wanting to be more than just capital. Our view was, in these markets, these entrepreneurs need someone who's alongside them that can help them grow their business. I think part of that came from my partner, Chuck Templeton. Chuck was founder of OpenTable. He was involved in the early days of Grubhub and Braintree, which was Venmo, CleverSafe, and a number of other businesses. He, prior to that, he was an Army Ranger. He's someone who really believes that you've got to, run towards the problem and build things from the ground up and really be a helping hand there. And I think that's part of our ethos. It's part of our culture. One of our cultural pillars is, being entrepreneurial centric as well. We have tremendous empathy for what the entrepreneur goes through. And so I think just giving them capital is not enough. We also recognize that these markets, you have to be patient. And in partnership with Lucas Walton and Builders Vision, we've been able to be patient, I think creative investors for the last 10 years. And so what are some of the things that we've tried to do? We have a 4-person corporate development team that they are every day calling on the large strategics, corporates, and offering up ideas, trying to be a resource for them, helping them meet their goals for their business. And we found that to be, if you focus on building relationships, not being transactional, we found that is, it's part of our ethos. And I think that has paid off, because a number of these large corporates will call on us and ask us for advice, thoughts, ideas. And that's been a huge advantage for us, particularly because our companies need those access to those customers, and so we can provide that when it's appropriate. Secondly, we've got an impact measurement capability, and so that's something we've built out. We've tried to lead there, but also recognize that entrepreneurs are trying to build their business, and so when we come in with something saying, well, you need to be managing and measuring impact, what we've tried to do is focus on that not being a compliance item, but more about something that creates value for them, whether it's in recruiting talent, in getting customers. How do you tell your story about the positive impact you're having in the world and make it more of a value creator rather than just a compliance item? So we engage there, day one after we invest in a company, we do onboarding and really help them there. I think telling the story of the entrepreneur. We have a marketing team that has done, I think, a really good job in building those stories of the entrepreneurs and showcasing them, and making sure that they have a voice out in the market, highlighting maybe their sector or subsector and where the opportunity is. And a lot of this is, it's a virtuous cycle, some of these items, because you're telling that story to strategics and corporates and customers of those companies. And then, probably the second to last thing I'd say before talking about the ecosystem is we are engaged in policy. We do engage quite a bit in policy around, we're frequently talking to legislators and in the U.S. the administration in the White House about different trends and opportunities, both Democrat and Republican. This is about investing behind science and innovation that drives down the cost and increases productivity for whether it's farmers or the energy system, grid modernization, things of that nature. And then the last thing is kind of, noted, Simon, was the ecosystem. We're big believers that we can be, one of our strengths is pulling together the ecosystem and having people talk to different parties that they've not talked to before and helping them engage. And that takes, and again, focus on relationships, not just transactions. We don't want to ever come across as a group that is just focused on transactions. We want to be someone who can be long-term relationships, whether it's through entrepreneurs or policymakers or other investors. We got to make tough decisions at times, which are transactional, but really think about the long-term nature. In terms of maybe a couple of companies, I'll just highlight maybe one or two that I'm particularly proud of. I think one is, we helped to stand up a business. It was basically an idea we created and spun off, actually, around farmland investing. This was something where the company is called Clear Frontier Ag Management. We were engaged with a number of large corporates, large CPGs that were talking to us about their organic supply chains and regenerative agriculture supply chains. There was some risk there. They had asked us, or we had proposed, what if we could go create a business in the U.S. that bought conventional farmland and converted that to organic and regenerative. And we had interest from these large CPGs and others, and we ended up recruiting a team, spinning that business off, and now have a business, Clear Frontier, that is doing exactly that. They own over 20,000 acres alongside farmers. They are, doing quite well. And we were able to bring in a number of investors alongside us to go and scale that business. So it's, and they're generating, they're doing quite well in terms of both environmental impact and the returns as well.
Oh, I love
so
that.
I think that's one example. Another one would be, this is more also in ag, Greenlight Biosciences. This company is an RNA solution in agriculture. The big ag companies have been trying to work on this for 20, 30 years. Very difficult because, as you may know, RNA is something that we learned quite a bit about during COVID, and it's very expensive to produce that. But if you're going to do it in agriculture, you need it to be cheap, but also high fidelity. Greenlight had cracked that code. We ended up taking the company public through a SPAC, then eventually took it private. And now they recently received EPA approval for their product, which is the first ever RNA based product, mRNA product, that got EPA approval. And in fact, the EPA designed a whole regulatory approval process based on Greenlight. And they now are seeing sales. And this is, I mean, I think I don't want to overstate our role, but I think we played a critical role in both working with the entrepreneur, building the business, going through their journey, working with both government and strategics. We also were patient capital, but yet there was urgency as well. And this business will transform agriculture. Not only this business, but what they're doing in RNA will help us as a society move from chemical-based pesticides, insecticides, herbicides, but also move to more biologics and RNA-based products, which are better for the planet and also can be more cost-effective for farmers as well.
Tell me, you mentioned a little bit about talent. What's it like? I mean, when you're hiring for S2G investors and you're building your team out, what are the things that really make a great employee? What are you looking for from an S2G employee?
Yeah, we've been quite blessed over the last 10 years to hire tremendous talent. I think when you're both trying to be world-class in investing and you're, investing with a purpose and a mission, I think it allows you to attract incredible talent. We always talk about we want to hire the best. These are, generally very type A, driven, ambitious, high intellect professionals. We are, we look all over the world for that. We use our networks and do lots of background checking to make sure they're a fit for us. I think capabilities, we sort of talk about capabilities and culture, and you've got to kind of score well in both. We're big believers in the culture we've created, the humility that we think we approach this business in every day. The investing business is incredibly humbling. You can have the greatest success and then, stumbles the next day. And so I think understanding that and, yet you need ego. I mean, in our business, people have ego because you're putting capital to work and you got to believe in your decision-making. And so that is part of the balance that we look for. People that are, high intellect, ambitious, driven, incredible work ethic, but can work well in teams. And, in financial services, as you probably know, you tend to get, a lot of peacocking. People that are, very interested in sort of their own, the me. And I think what we're looking for, the type A, driven, ambitious people, high intellect, but they also can work well in teams. They're not thinking about me, they're thinking about we. They believe in a culture of, we talk about things like love in our organization because we want really a team atmosphere. And that's really, I think, the one thing that I'm incredibly proud of is we've been able to build an organization that is like that.
Awesome. And do you think they come to you, like, how you spoke about yourself when Chuck kind of contacted you and you hadn't really considered, the climate and the purpose-driven kind of philosophy. Do you think the people that you are generally bringing in, they've got that embedded in them initially, as it were? That's their main kind of motivator and driver.
Not necessarily. I think that, it's probably different today than it was 5 years ago, where, there's a lot more knowledge of these spaces and sectors. And I think, depending on where someone is in their career, they are thinking about, what makes them whole as an individual versus maybe 10 years ago. We weren't necessarily all thinking about that kind of holistic self. But I think today we found that, even I was on a few recruiting calls yesterday, and some of the professionals I'm talking to have never thought about a career in sustainability or impact, but they were called by a recruiter we're using, and they dug into who we are and what we do, and they didn't know that these kind of opportunities exist. But you look at their qualifications, and they are just world-class professionals. And so I think for that to me is the exciting part. Is I can sell a story about our business that is true, that has integrity, that has purpose, that I think you put us up against other firms that are just about making money, which nothing wrong with that. But I think we tap into something in a number of individuals that I think is something that they have not thought about before because they didn't know those options existed.
Yeah, it's unique. And as a headhunter, certainly making those calls and bringing people into the climate, food, ag tech, spaces to reflect on discussions with them years afterwards and the purpose they find. That is the gratifying thing, I think, from my viewpoint. So it does feel like we're in this once in a generation kind of change now, really, as it relates to really what people want from their job, broader than just success and money.
I think that's right.
It's a very, very interesting time. But it sounds like it's been the best job for you, the best company, and you sound like you've had a real blast over the last kind of 8 years with things.
It's been a lot of fun. It's we're just getting started. We think, but it has been an incredible journey, and I can't imagine doing anything else.
Oh man, awesome. Well, listen, I really appreciate it, Aaron. Thanks so much for sharing, your insights and the incredible work you guys do, right, to really drive innovation across these sustainable industries. So it's been a pleasure having you on the show. And, to our listeners, really appreciate you tuning in to this episode of Leaders on a Mission. So if you enjoyed the conversation, please subscribe, rate, and review us on your favorite podcast platform. And stay tuned for more inspiring stories and expert insights from leaders driving positive change. So until next time, keep leading with purpose and passion.